Since breaking all-time highs in mid-March of this year, Bitcoin's price has been down and sideways. From long-term hodlers selling to miners depleting reserves, we look at 4 potential catalysts for why we could be experiencing this recent sell-off. And as always, we run the numbers and it's backed by data. Welcome to Bitcoin Daily. I'm Dante Cook, head of Swan Business. Considering that Bitcoin was at 30K just a year ago, and in March we touched an all-time high of 73K, it's fascinating to see that just a week ago, the market was more fearful than greedy and has since climbed to about neutral, even though Bitcoin's price sits just 15% off of an all-time high at 63K. From 2020 to 2021, Bitcoin experienced drawdowns of 10% or more 13 times. And this has many long-term believers in decentralized computing and general advocates of Bitcoin like Peter Thiel somewhat nervous about whether Bitcoin can continue to go up in price.
But then there, probably the part where I'm less convinced of is this question of the sort of ideological founding vision of Bitcoin or these cryptocurrencies as sort of a cypherpunk, crypto-anarchist, libertarian, anti-centralized government thing. This is always the line.
Isn't that what got you interested in the first place?
That's what I thought was terrific about it. And then the question is, does it really work that way? Or has that thread somehow gotten lost? And so when people in the FBI tell me that they'd much rather have criminals use Bitcoin than $100 bills, it suggests that maybe it's not quite working the way it was supposed to.
Have you sold any of your Bitcoin?
I still hold some. There are all these ways I didn't buy as much as I should have, I'm not sure it's going to go up that dramatically from here.
From here?
Yeah, I think we got the ETF edition, and I don't know who else buys it quickly from here.
It's kind of cool to see in this video that a guy like Peter Thiel is like the rest of us, regretting that he didn't stack enough sats. But back to the programming and the fact that the long-term thesis of Bitcoin remains intact and unchanged. As long as there is an ability for humans to play God and they can create their own future or money out of thin air like the US government, things will continue to look good for Bitcoin. And as Jerome Powell said just a few months ago, we are on an unsustainable fiscal path.
Is the national debt a danger to the economy, in your view?
In the long run, the U.S. is on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path, and that just means that the debt is growing faster than the economy.
I have the sense this worries you very much.
Over the long run, of course it does. We're borrowing from future generations. It's time for us to get back to putting a priority on fiscal sustainability.
I've got lots of questions of people asking me, Dante, what's going on with this recent Bitcoin sell-off? And instead of just saying the long-term thesis of Bitcoin remains intact, let's look at 4 potential catalysts. And lucky for us, we have one of the best researchers out there on our team, Sam Callahan, our senior research analyst. And let me be honest and let me be clear here. If anyone gives you an exact reason as to why Bitcoin's price has moved, they're wrong. There is no answer and we don't know. But here are some potential reasons backed by some data. Potential reason number 1, long-term hodlers are selling. You all have heard us in the Bitcoin community talk about how many people have diamond hands. And they typically cite a stat like 70% of the circulating supply that's held for more than a year has not moved. Well, that number has fallen to 65%. That doesn't necessarily constitute day trading, as that's a lot of people who are not selling their Bitcoin, but it's still a decrease. If you look at the long-term circulating supply that has not moved in 2 years or more, well, that number has decreased from 57% to 54%. But this isn't a reason to panic. This is actually normal human behavior that tends to play out every single cycle. Whenever Bitcoin's price gets near an all-time high, long-term whales tend to sell. That's a pretty good place for people to get out who've been holding for a long time. Or it's a place for people like Peter Schiff to cry and continue to say that Bitcoin has no value. Right around each halving, you tend to see a sell-off. And then there's this long-term sideways pattern of behavior of accumulation and consolidation. A lot of people get bored and actually sell out during these periods. But these are actually the periods where Bitcoin makes higher and higher floors each 4 years. The consolidation period in 2017 was 50 days. In 2020, it was just 21 days. And now we're at a consolidation phase of about 115 days. This isn't scary to me. This is a really exciting development because it's showing that there continues to be long-term consolidators and buyers of Bitcoin who continue to keep this price where it is. Potential reason number 2 for a sell-off. Miners are selling. I know that time flies and we tend to forget things pretty quickly in this new age of social media. But if you don't remember, on April 19th this year, there was a pretty big event that happened in the Bitcoin industry, the Bitcoin halving, where the miner subsidy was cut from 6.25 Bitcoin to 3.125 Bitcoin, or 3 1/8. Essentially, miners' revenues were cut in half overnight while they're waiting for the price to increase. So leading up to a halving, miners tend to hold lots of Bitcoin in reserves. And because they know that their revenues are going to get cut in half and transaction fees aren't just going to explode immediately, they sell off those reserves so that they can weather the storm. Bitcoin mining is a ruthless industry because every 18 months, the machines and equipment that you're using to hash or protect the network and earn those subsidies tend to be out of date with the growth of computing capacity. This is especially true if you have electricity prices that get out of whack as you leave from one contract to another contract. One of the ways that you can look at how much money that miners are expected to generate in the form of revenue is a metric called hash price. And as you can see, hash price is at near all-time low levels right now. And so, miners are getting squeezed. In June alone, miners transferred $4.5 billion worth of Bitcoin to exchanges. And in June as well, there was also a single day where 1,000 Bitcoin were sold by miners. Potential catalyst number 3, Mt. Gox creditors are selling their Bitcoin. So if you don't remember, on June 24th, there was an announcement that Bitcoin creditors of the Mt. Gox fraud would be repaid. This, in the short term, initially sparked fear in the markets that these low dollar price Bitcoin coins would be hitting the market, causing major selling pressure on the price of Bitcoin. As the price of Bitcoin, depending upon when you look at it, could have been between $800 to $1,000 per coin. But here's 2 issues that I have with this. These creditors have had 10 years to sell this Bitcoin. And you think that they're just now going to sell it? Not likely. And also, do you know how big of a tax penalty and liability that they would have? As Bitcoin is now over $60,000 per coin. And the ones that they would be selling would be sub $1,000 coins. It's very unlikely that people would do this, given that they have capital gains in most other places like the S&P 500 or the market generally this year, and so they wouldn't be offsetting losses. But it's a potential catalyst nonetheless. Catalyst number 4. We've talked about governments having large pots of Bitcoin that they've accumulated through overtaking fraudulent schemes. The German government, just a few months ago, seized 50,000 Bitcoin from a movie piracy site. And that catapulted them to being the 4th largest Bitcoin holder as a nation state around the world. And just last week, Germany's government went on a selling spree, selling 3,000 Bitcoin worth about $180 million. And the US government wasn't far behind, sending 4,000 Bitcoin to Coinbase worth about $240 million. But the US government stack is a lot bigger than Germany's, as they're sitting on about 209,000 Bitcoin worth $12.7 billion. If the governments continue to unload Bitcoin onto the market, it could have continued down pressure on the Bitcoin price. But in the grand scheme of things, like we always say on the show, we need to zoom out. This is par for the course. From 2015 to 2017, the average drawdown was 30%. From 2019 to 2021, the typical drawdown was 25%, with 2 drawdowns of more than 50%. And so far, from 2023 to 2024, the drawdowns have been roughly 15 to 20%. So we could expect more and more selling. But long-term convicted Bitcoiners, people like Tom Lee from Fundstrat, continue to see the long-term potential of Bitcoin and have price predictions as high as $150,000 in 2024.
Bitcoin's probably suffering from the Mt. Gox, starting distributions in July. That was a huge overhang for many years. But if I was investing in crypto knowing that one of the biggest overhangs is going to disappear in July, I think it's a reason to actually expect a pretty sharp rebound in the second half. So I think, 150 is still within.
It's already July 1st, so so you're not taking that off the table. That's still a possibility.
That's right.
So zoom out and take a long-term view on Bitcoin. Have some diamond hands. You should look at this 121 days of consolidation as a great opportunity to continue stacking sats while the market continues sideways. This is a place where we're creating a long-term floor of new hodlers and convicted and grizzled old hodlers like myself for the next bull run that's going to happen. So we're not too late. We're still early. And with that, we're signing off for the day. This is Dante Cook with Swan.com. Happy stacking.